Good evening, ladies and gentlemen. Didn't do a live stream on Friday. I apologize for that. But nothing really has happened in the marketplace today for the good old BTC. I hope everyone is doing well, given that today's price action has been somewhat muted. The stock market is coming into the realization that maybe the Fed does mean business. You see, we've got the issue now of JPMorgan suggesting that until the Fed turns and starts to cut the interest rates, the market in principle has not yet bottomed. See, usually the market bottoms out and then the Fed cuts the rates. We go back a couple of days and going into the last week or so, that's not the story that's being suggested here. Now, part and parcel of what we're doing in this channel, guys, is to give you the information and how we can look to exploit that information by potentially investing or taking trades in desired assets, whether you trade forex, whether you trade crypto, whether you trade the stock market, bonds market, commodities market, you name it, futures markets, whatever. Ultimately, the market is not the economy, and the economy is not the market. It takes the economy longer to put things into place. Word on the street does suggest that bets are being called for a 50 basis point price in. What does that mean? It means the market is pricing the idea of interest rates going up, okay? We've got layoffs that have happened across the board, okay, in the tech sector. Now, earnings season has given us the idea that we're in an earnings recession. Now, I know over the last couple of videos, we've been talking about how everything has gone to the pan. But more importantly, we need to understand what the markets are actually doing. How are they responding to it? You got the 2-year yield still higher than the 10-year yield. That automatically tells us short-term money is being favored as opposed to long-term money. You know the principle. In a bullish market, buy and just hope for the best. Cryptocurrency's last run up to the upside at 69K was pretty much, you didn't need to have a system in place. You just needed to buy crypto because you were in the idea that everything was going up either way. Now, more importantly, we are in a bit of a different situation. Everything's going down and investors are holding on to the idea that this move is going to be the move that sends Bitcoin higher. Remember, Bitcoin, quite frankly, was the only volatile asset today. And we're going to be going into the charts talking about this, guys. All right. The NASDAQ didn't do anything. S&P didn't really do much. All right. The dollar has moved up ever so slightly. And we're going to go into a little bit of forex to help you gauge the relationship between where money is moving from and where it's going towards. All right. The markets are in a bit of a tricky situation. We don't have normal marketplaces right now, and it's all data dependent. One bout of bad news on inflation is going to send the market into haywire. It's always going to go back to the idea of Mr. Powell, whether you're going to increase the interest rates or not. Everyone's looking for that terminal rate. We're not there yet. The market hasn't bottomed for us to understand that the Fed's going to be pivoting. And this is the article that JPMorgan was speaking about. So, excuse me. If you are new to the channel and you want to learn more about this hybrid system, stick around because we've got a lot to discuss this evening. Let's roll with the flavor, ladies and gentlemen. Here we go. So, before I talk about this bad boy right here, let's just hide all of that. Okay, then, cool. Where are we right now with Bitcoin? All right. If you look at Bitcoin purely from a technical standpoint, a lot of guys are looking at this thinking this is a bullish flag. Okay. You might get guys on Twitter drawing this madness right here. Okay. And quite frankly, let me just get rid of this. Quite frankly, a lot of people are hoping on the idea that Bitcoin can do something like this. Now, look, I don't use these structures, and there are traders that have used them successfully. But these structures right here give me insight into believing where traders can get trapped. You see this little drop right here? That is a classic example of traders waiting for a bullish flag, for example, to break out, or a bearish flag to break out, whatever you want to call it. They get trapped. They come away from the idea of a bearish flag at that point in time. They remove their drawings off the chart, and then they say to themselves, right, let's draw another structure. You're always having to readjust. But the hybrid system gives you a different understanding of the marketplace. It helps you understand why people are stepping in from a psychological standpoint. When you understand the business model of the hybrid system, then you'll understand how the market operates. The hybrid system is not there to tell you indefinitely where price is going to go, okay? But it improves the odds of a trade working in your favor when confluences come together. In other words, when you see a number of things adding up in terms of technical analysis, then all that's left for you to do is just take the trade. There is no holy grail when it comes to trading. That anyone endorses the idea of a holy grail, they're lying to you. That's the issue. Now, some algorithmic traders will talk about, this system gives me 99% returns on a backtest of 1,000 trades. Okay, cool. You then come to test it. Well, what are the current market situations right now? Are they going to be exactly the same as what they were back then? Do algorithm traders work only in bullish markets? Does it work in bearish markets? What about when we don't know where we are, which is exactly where we are right now in the marketplace? All right. Going over to Bitcoin on the weekly time frame, we've got ourselves a very interesting story right here. Okay. Bitcoin has rejected the 50 EMA on the weekly twice. Now, this is valid for my guys who are holders of Bitcoin, trying to work out is now the right time to step into Bitcoin. And I said to you guys not so long ago, you only really want to be buying Bitcoin from a technical point of view as a holder when it doesn't have to break resistance. Okay? Right now, if you brought Bitcoin from 17K, you'd be laughing. Happy days. You've seen success in the move. All right? But now you've come to a point where you're saying to yourself, do I add? And then you're thinking, hold on a second, should I add to this? But we're at 50 EMA resistance. Now there's the same guy who's coming into the chart looking at it saying, should I buy at this point? The fact is he's missed the point of opportunity at the 17 zone. Is he going to buy at this point? In my opinion, if you believe Bitcoin is now tipped to start going back towards its all-time highs, then you really in principle have this area right here for flexibility. Why? Because price will come up, break the 50, wait for it to come back into it to continue back up. You're getting a better fill inside of this zone because it's on the premise that price is going to continue this narrative to the upside. That's how you can establish the best way or improve the odds of a trade working in your favor when you don't trade into resistance. You're trading into resistance here. If you believe that the move is making you think that Bitcoin is going to continue higher, and you know what? It could continue higher from this point. But at this point in time, right now, you don't know if it's going to continue higher because you're looking at it saying it's resisting the 50 EMA. All right? Now we look at that, but at the same token, we go to the daily, and now we've got ourselves a daily golden cross. The golden cross has stepped in, ladies and gentlemen. But when you get articles like this, JPMorgan strategists say stock rally will fade. All right? You're kind of like putting things into the perspective of, well, what do I roll with? If I'm a holder of Bitcoin, am I going to be aligning my purchases with the economic outlook? Okay? Because you might say to yourself, I only want to buy Bitcoin in the next 5-6 weeks. Well, you're going to be able to filter how effective the economy is going to be looking in the next 6 weeks or so. We look at the news articles, the news announcements that are due out very soon. We have got the FOMC minutes coming out on Wednesday. Here we go. Wednesday, 7 p.m. GMT. Now, it's not usually a big market mover. It's usually when you've got your FOMC press conference, but the minutes are going to pretty much reveal where we currently stand in relation to the existing data that is coming out regarding the US. All right. Core price index is going to come out, and we've got some information understanding that inflation has looked like it's come back down, but prices are still going up. All right. Now, you've got a confliction of investment banks saying things are going down, things are going up. So look at this. You've got Goldman Sachs pretty much going all in on the idea that Chinese equities are going to resume a rally as the world's second biggest economy deepens stimulus and relaxes pandemic restrictions. They had anticipated that China was going to cause the initial reaction for the market to move up, which we did kind of get that, all right? But from an economical point of view, the market itself is not ready, in my opinion, to suggest that we're going to keep going higher. How long we go higher for is a different story. If you're a scalper of cryptocurrency, it doesn't matter what the economy is saying. Okay, you're looking at specific zones, which brings me over to this logic over here. Check this out. This is something that I had shared with the good old patrons of the channel. Check this out. Let me bring it back so you can see exactly what I'm talking about. Back to this. Okay, cool. So, right here. Over the weekends, what I do is I share my macro outlook of where I think Bitcoin's likely to end up going into the start of next week. Okay? Now, in front of you, I kind of broke down to help guys understand how to use the hybrid system. All right? I'm highlighting key points in the chart, like this 23763 volume profile support zone, getting them to understand what happens and what to anticipate if price were to head towards that zone, what to anticipate inside of the stop run zone, and what we understand about the sharp reversals from the 26K zone. The hybrid system isn't about making sure you know indefinitely where price is going to go, because I can't tell when you're going to trade. You're going to trade Asia, you're going to trade New York, you're going to trade the UK session. I don't know when you're going to apply it, okay? We then go into the actual chart itself, and then we have a look at Bitcoin's behavior since Saturday. And you see each of these zones have sort of come out into fruition. You see how the 23763 zone acts as support. They didn't take that volume profile point right there, but you had an understanding that that is where something could happen. And in the article itself, we spoke about this is where we would expect price to start getting aggressive. And in line with the hybrid system, when you see 3 hits lower, this is where market maker is doing his business. You're looking for this play right here. Likewise, in the opposite direction, when you see the market maker moving up, look, he's shifting out. He did it here, shifting out into the stop run zone, okay? And pulled it back again. Comes into that same zone, pulls it back again. This is what you learn about the hybrid system. So now we're going to take that same information and go, and that's for my day traders, okay? We're going to take that same information and go correlate it to other assets to help us understand what the story is across the board, okay? So going back into the chart, the markets haven't done anything, okay? If we go over to the actual NASDAQ itself, you can see NASDAQ futures, they haven't done much, okay? They're holding out. And they're doing a good job of holding inside of this zone until otherwise. As it stands, this is what we see in the marketplace. It's pretty flat across the board, as you can see here. NASDAQ is down on trading. All right, it's below average. Nothing much has been happening other than the fact that President Biden, and listen, guys, go show some love to my guy, Jim Laporta. Happens to be Mike Dutch's brother, okay? He's a journalist, and my guy sat on Rolling Stone talking about President Biden making a surprise visit to Ukraine. You know, it's already had 360,000 views on there. So, yeah, man, like Mike Dutch, my guy Jim, happy days. Well done for that, my bro. But it's not the first time he's been on Rolling Stones, and I believe he's been elsewhere. He used to be a news anchor for someone else, but a very big... man, I don't even know, man. Mike, you're going to have to help me out here, bro. Just have a look at Bitcoin right now on this high block, okay? I'm jumping in between information just to get you to understand that nothing much has been happening in the marketplace, but I'm giving you, in essence, a projection of how to prepare for what is due to happen. Because we know that when New York has a bank holiday, it usually comes back with a bit of treachery. Now, what's been going on here, guys, is Bitcoin has been preparing the guys for what could be an up or a down move. Quite frankly, right, when you're looking at the chart, okay, everyone's always going to ask Bitcoin up, Bitcoin down. It's not about whether it goes up or down. It's about how long you're in the trade for before it goes down and then before it goes up, okay? If you believe Bitcoin is going to go up from this current point, what reasons do you have for Bitcoin to go up? You're working it out. Take your technical analysis and then say to yourself, okay, cool. I believe Bitcoin's going to go up. It's going to come up and hit this stop zone one more time before it decides to roll over to come back down into the vector candle recovery point right here, which is the blue vector candle zone. Okay? Down there. All right, cool. So set your parameters. You run a short from here. Where's your exit? Work it out with how much money you're prepared to risk. Because I don't know how much you're prepared to risk. No one knows. because it's just you and the charts. And this is the problem that trading has. We will never know exactly where price is going to go. The hybrid system will tell you and suggest to you the potential point of interest where the liquidity resides. And that right there with the high block itself. You can see, look, right there, 25,300, there's $490 million worth of long liquidation, short liquidations. Okay, cool. That tells me what? Tells me that there's a lot of margin traders in that zone. Well, if price can hold this region here, I would naturally assume that Bitcoin's going to come up and attack that point. That's all you've got. There's nothing more to it. You're only chasing pools of liquidity. That is it. That's what the hybrid system is. That's what trading is. You're getting an insight into where the liquidity could end up. Okay? Now, we've got all issues across the board, guys. All right? You got my guy right here, good old Kim, and his sister warning the US of a more fatal security crisis. Listen, it's not the first time that... What? Audio's bad. How bad is audio, man? How bad is audio? How bad is the audio? Let me sort this out. Is it bad? Man. I don't understand why my audio's bad. How's that? Does it sound good? Mike? Yeah, okay, cool. Seems like everyone's okay about it. Audio's good. Yep, all right, cool. No worries. Anyways. So why are they making this warning? This here is scaremongering. But I mean, in my opinion, it's a scaremongering tactic, okay? Now, the bigger picture suggests the following. Look at this. US holiday lifts rates gloom. So investors already are going to be coming back to the charts tomorrow with the idea that there's going to be a bit of a situation in relation to the interest rates, all right? We know this already. The inflation data has suggested that. Audio's been good. Audio sounds perfect. Happy days. All right, maybe, might be hearing something different. Okay, then, cool. But what I'm trying to say to you guys is when you're navigating the start of the week, all right, and this is the information you get, an article like this by JPMorgan, stock rally will fade. Okay, cool, stock rally will fade. Well, where do you need to go to understand that's going to be the truth? Well, firstly, you go over to the dominance of the dollar and you say to yourself, okay, hold on. What can I expect from the dollar dominance? Now, we know, okay, when the dollar dominance starts to go up, it tells us that they're selling on euro. It tells us they're selling on pound because the dollar dominance is made up of a basket of assets. All right. Forex is very important when it comes to the marketplace because if I favor American stocks, what am I going to do? I'm going to take my euros or my pound and I'm going to convert it to US dollars. I then might borrow more US dollars, okay, and then go and pick up stocks in the US. But what if I don't favor US stocks? And this is what was been fueling the euro's rally. Hedge funds are showing a bit more favor to the euro, which is why European stocks have been moving up, even though the eurozone itself, we've got the issues with inflation, energy crisis, and all this situation with overseas conflicts. That kind of puts things into perspective on where we should be putting our money. All right. But you have to establish the time frame that you're going to be keeping your money committed for, which leads me over to this bad boy right here, the 2-year yield. Look, this bad boy has gapped up. All right. We need it to be at least between 4. We need it to be at 4% to be in a position to be buying. All right. The 10-year yield is still going up. It's gone above that 3.86 zone and it's still holding out inside of this region right here, which is a bit of a problem, which could suggest that we could see the yields go up a little bit more. Word on the street does say that they could be seeing a 5% yield on the 10-year. Like crazy, man. That is wild. But then we go over to the volatility index. You should do this practice, guys, when you're coming to the charts. Don't just go blindly into Bitcoin, all right? I mean, look at this. Look at what's being said about cryptocurrency. Look at this. You've got right now, darknet, Bitcoin use is persistent despite busts. All right. So we've seen a bit of a drop since 2018. Now, they haven't updated it since. OK, but since the high, we've had a bit of the usage of it hasn't been so great. Waiting for the article to come out with some more information about what its current use is. OK, but things are starting to slow down. We go into this. Companies banking the most on Bitcoin. Tesla, all right, MicroStrategy, and this was April 22. Marathon, Block, Bitfarms, Coinbase. There's no one in Wall Street other than Tesla, all right? No one. When you see JPMorgan and you see BlackRock and you see all the other guys, and hopefully the next article will come out and show those companies involved in that. But you've got to understand, like, look what we're going into. Central banks issue digital currencies. Look at where it's being issued, where it's being piloted. We're going in a transition, but the economy is absolutely dog. All right? The market has to drop drastically for any of these resets and the woke society to step in and be like, oh, they're going to try and take your cash away. They're going to try and make you do this, going to try and make you do that. Listen, they're not going to break the same system that helps them make so much money, all right? They're just going to introduce different ways of doing things. That's the truth, okay? In my opinion, we will always have fiat. Always have fiat. Because that's what cryptocurrency is. Cryptocurrency just shows everything. It's all on the blockchain. All you've got to do is just make sure you find out who the address belongs to. You do it now. You've got so many people that have got like 50 billion SHIB and, oh, what's going to happen with that SHIB right there? Or what about this Bitcoin wallet? He hasn't moved Bitcoin in the last 6 months and all of a sudden he's now brought X amount of Bitcoin. Oh, I better go long on Bitcoin because my guy's buying Bitcoin. You don't know what he's doing with that Bitcoin. Is he buying the Bitcoin to go and sell it off to something else? You don't know. But I know that the usual consensus says that when people are loading up Bitcoin into their wallets and it's not going into an exchange, then they're not seeking liquidity to get rid of the Bitcoin. But you just don't know unless you follow the full trail of the actual blockchain address when the person's buying or selling crypto. And that's the issue that I've got with cryptocurrency in the sense where, okay, if he's buying 200 Bitcoin, for what reason? You know, because you don't know what he's going to do with it afterwards. Okay, if he transfers it back to an exchange, you see the transaction and you think, okay, maybe he's trying to get rid of it, but you just don't know. But that's how people make their decisions. They follow whales and they think, okay, that's it. But how many times have we seen whales buy Bitcoin and Bitcoin just kept on going down and down and down and down? All right, so it kind of invalidates that. But then people will look to the chart and then they'll say to themselves, okay, maybe if Bitcoin can sustain a move to the upside and there's a whale that's brought loads of Bitcoin, then it means that Bitcoin's going up. Do you see what I mean? It doesn't justify it. So that's where I then say to myself, okay, let me look at the charts because that's all I've got. And the sad truth is we see the end of the math of the actual move itself. The candlesticks are the aftermath of what the relationship between the buyers and the sellers are doing. Okay? We all know that price moves in a cyclical fashion, whether you call it the Wyckoff theory or anything like that. On this channel, we talk about W's and M's, ladies and gentlemen, and we talk about cycles and levels, okay? And this is what it is. Where's Bitcoin right now? From a cyclical point of view. We go back into the chart, start again, go to the 4-hour time frame, look down, where's Bitcoin come from? Okay, then, cool. So we have got one huge W formation right here. All right, then. Cool. We got a rise up level 1, retrace. Now we got a rise up level 2. We're expecting Bitcoin to continue back up. Take that information, look left, and you've got yourself a vector candle region right here, which in principle would suggest Bitcoin's going to come back up into this zone. But we need to make sure that we cleanly break that 25,243 zone, which was the last point of resistance. Or the last point that market maker had trapped the retail trader into believing that the bottom was in and he was building his shorts at the highest point, which is another strategy that you want to be aware of. When you start seeing green vector candles appearing like this, and it's all in a collective zone, but not going anywhere, that's when you start to say to yourself, you know what, hold up, I need to be careful here. It has recovered most of this vector candle region right here, and a release of that zone beyond that point would suggest Bitcoin is in a cyclical move to the upside. But what's it going to do before that? You see? Because news tomorrow could come out and rock Bitcoin and send it down. If it goes beyond this point right here, guys, if it goes beyond this structural point right here, Bitcoin will most likely start eating the liquidity right here. Now, if you get tomorrow in the marketplace, when New York comes back to business and Bitcoin doesn't actually go anywhere and you see NASDAQ going down or S&P going down and the dominance of the dollar going up, you can bet that Bitcoin is likely to follow suit because Bitcoin has stalled too much, in my opinion, in this zone. All right? We need to break that 25,243 zone, guys. That is the truth. That's what I need to see Bitcoin doing. Even if we correlate all of the liquidity that is due in the chart, you just go over to the 1 month time frame on Bitcoin on the high block. There's not that much liquidity above, but this is down here. 20,900, you got $19 billion worth of long liquidations. Does that mean Bitcoin is indefinitely going to come back down from this current point? You don't know. That's the truth. Are you prepared to open a trade and say to yourself, I'm going to be able to absorb Bitcoin going all the way up to 30K? Can you absorb it? It might not go to 30K. Remember, we're in an environment in the marketplace which is receptive to news announcements. That's the truth. Okay, you got articles like this. Fed faces a new inflection point amid troubling inflation data. This is the problem that we've got. It's sticky, the inflation, and the jobs market. Oh my days, man. The jobs market data this week. Here we go. We've got a lot of data this week coming out in relation to the manufacturing sector. All right, and it's already contracting. Readings below 50 suggest that there is a contraction in the sector itself. So the economy is slowing down. All right. You then take that information and then you go over to the yields themselves. And can you justify the economy slowing down? Yes, because the yields are moving up. 10-year yield moving up. This is the government advertising, look, you can get this interest rate with us. When it goes down, it means that investors are going into assets like NASDAQ, forex, Bitcoin, and all that stuff. All right? But when the yields are rising up, it's an advert to say, look, give us your money and you'll get 3.86%. But they're not even putting their money into the bonds because it's going up. You look at the 10-year bonds themselves, the bonds market's taken a dump and it's coming back down in towards this recovery of this big move up. That's how you're able to establish the relationship of how the market could effectively move from one day to the next. Okay, you follow the trail of money. Don't be just blindsided by just how Bitcoin's moving and then go onto Twitter and say, like, what's my guy saying about Twitter? I mean, crypto, what's he saying about Bitcoin? Or how many whales have done this and done that? Look, in my opinion, cryptocurrency is a dwarf in terms of market cap in comparison to the stock market. You want to learn about cryptocurrency? Just watch what Tesla does and its market cap, because it's pretty much near enough half of what crypto is nearly. You know? Have a look at the bigger market cap marketplaces like forex. If euro's going down, it's suggesting to you that people are picking up dollars. If the stock market's going down, it would suggest to you that people are getting rid of assets. They're trying to lighten up their portfolios and their exposure. Naturally, if we assume that Bitcoin follows the stock market, Bitcoin will also follow suit and go down lower. So, if you are new to the channel, be sure to like and subscribe, and you want to learn more about the hybrid system, check out the Patreon itself. But with this takeaway on this information, guys, tomorrow we're going into a full trading day and we are down a pool of liquidity. It would be wise that you sit and wait until the New York session is in full swing. The first hour and a half of trading in the New York session is pretty much going to dictate the rest of the session. But we do have the FOMC minutes coming out on the Wednesday. So the market might still be muted on what the Fed's going to be doing and how likely the interest rate hikes are going to stop. In my opinion, they ain't stopping until the workforce in the US starts to lose their jobs. And that's the sad truth of the game, ladies and gentlemen. The Fed needs to start forcing people to lose their jobs by increasing the interest rates, increasing the cost of business, so that companies need to focus on their profit margins and lay off more people. We've had the first wave of people losing their jobs. So when you start seeing another wave of job losses by the same companies, that's when things are going to start getting a little bit tricky. All right? Don't be fooled by too many news articles out there about what's going on in the world. Ultimately, you need to focus on what the charts are suggesting to you. And again, the game of trading is probabilities. There is no indefinite way to exploit the chart. It's about how you are able to control yourself when the money's on the line. I'll catch up with you all tomorrow, ladies and gentlemen. Mad love and respect. Peace.